Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. Now before I begin, I want to welcome you guys back to the live stream recap videos because I've been on a break for about 2 weeks. So in this video, I want to talk about two significant trades that we made. One is a swing trade that has been closed, which is Meta, and the other one is still an ongoing swing trade, which is SPY. All right, so I want to go over Meta first. So Meta platforms. Now, why did I get a call position on Meta? Well, first of all, if we take a look at the monthly time frame, okay? So we're just gonna get right into it. So on the monthly time frame, we have a very critical pivot point of $88.50. And I had drawn the support level a couple weeks ago, and I was just waiting for the price to retest this level because I knew that once we retested it, we'll be very, very oversold, and it will be a good inflection point for buyers to come in. And guess what? When we look at the RSI on the monthly time frame, right? It's the biggest time frame that you can go out on TradingView here. We're still oversold even after the fact that we've bounced off of the 88.50 level. And if you go on the weekly time frame as well, we're still oversold. And then on the daily, we were oversold, but thanks to the bounce that we had today, we're back above that 30 value on RSI that indicates that the price is oversold, right? So we're back above it, so we're not oversold anymore on the daily, but we're still very much oversold on the weekly and monthly, which could indicate that we can have another push up higher, possibly back into that triple digit share price. All right, so with that in mind, okay, let me tell you guys what I did on Thursday of last week. So on Thursday, we retested, okay, 88.50. And that was the first day that we saw a retest on the 88.50 monthly inflection level or inflection point. And I decided to send out a position for Meta once I saw that retest around 7:30ish to around 8 o'clock, right? And as I was watching the price here between that time range, this is the contract that I sent. Okay, right over here. So Meta $100 call strike that expires on November 18th. All right. And once I saw that retest and bounce at 88.50, I said, okay, this is where we need to go in, right? And we started to stray away from 88.50. But then throughout the entirety of the day, we just continued to consolidate and we retested the 88.50 level once more. And we started making this intraday level of around $90 to 90.50. And then on Friday, we respected that range once more. Now, I almost got out on Friday because it looked like we're about to go below $88, right? And thankfully, we're able to hold that 88 whole number level here, since 88.50 is also another whole number level. If you guys didn't know, I consider 0.50 and 0.00 price levels as whole number levels, right? Most of my students know this as well, and I give a great reason why. Now, Meta here, after it decided to hit new 2022 lows of $88.11, we actually bounced, and I'm glad that we bounced because I would have been out underneath $88, right? So basically, I was keeping a very, very tight stop loss, but if I had to, I would have expanded my stop loss to about $1, right? Since my entry was around $88.50. But thankfully, I didn't have to do that. I just kept with my initial stop loss here of 50 cents. I just had to get out if it went below and stayed below $88. And from that point forward, okay, we went into next week, which is, well, this week, right, on Monday. Now, we were able to have this very nice jump, because first of all, the news came out at a perfect time on the technical chart. And if you guys have been in the stock market for quite some time now, you guys should know and understand that at very, very critical levels of support or resistance, there tends to be a very critical piece of news or catalyst that tends to initiate the price to react on that specific level in a certain way. So in this case, we decided to move away, rapidly away from the support level of $88.50 when Meta Platforms announced that they will be laying off thousands of workers and employees in order to decrease their input costs as they have been burning cash on the metaverse venture, and in order to kind of dampen their potential losses into next year, as many CEOs and many analysts and economists are worried about a recession. So Meta Platforms, basically that is a positive catalyst in the long term, but obviously it's negative in the short term because, well, we never like to see people losing jobs, right? We always want to see growth and burgeoning of jobs, and especially for a company to be hiring and growing more as a company globally, right? Especially for a social media company like this. So Meta Platforms was able to have a nice reaction pre-market, and I decided to get out right at the high of the first 15-minute candlestick here, right? So we pushed up higher and higher and higher. So if you go on the 5-minute time frame, right at open, okay, we start to push up higher, and this is when I decided to sell for 180% around 6:30 a.m. right? So it was basically a minute after, right? And I saw the premium pumping as the price started to pump as well right at open. I was like, okay, this has to be a reaction that I have to use and to my advantage to get out, because I don't want to hold something that's really close to expiration, since this expiration is on November 18th. And if it decides to retrace all the gains that it made just right now after market open, I don't want to lose all of that, right? So just in the event that we go back all the way down to, I would say, 88.50 again, I decided to take profits right then and there. Now, obviously, in hindsight, we had a lot more room to go up, right? And let me just go back to the 15-minute time frame here, right? But here's the thing, right? I decided to continue to watch Meta today for my CFO Stream Watch members in the Discord, and I told them that there is a possibility for us to have another entry using the same contracts at the hold and bounce of $95. And guess what? That's exactly what we did. And if you take a look closely here, just like how we were making a wedge in the overall markets, Meta was also forming a wedge in the intraday time frame. And fortunately for us, that $95 support level, okay, turned out to be the inflection point where we needed to bounce off of in order to break out of this wedge to the upside. And obviously, the overall market movement during the last 2 hours definitely helped Meta to continue up higher. Now, from this point forward, I would say that you have to be a little bit cautious here with Meta, because we are at a very critical level of resistance on the intraday time frame, where you can see this level on the 2-hour time frame as well. So on the 2-hour time frame, we have this level between 96.80 to 97. If you guys want to round up, just use 97. Okay. Now, specifically, this 96.85-ish level, this resistance level, has been a very hard level of resistance to get past. How do we know this? Well, we saw it back on November 1st, right? Where we see these two candlesticks here, where we obviously see the top wicks where we weren't able to hold above this 96.85-ish resistance level. And this is our second retest after retesting it for the first time here in November 1st. So I would expect another movement to the downside on Meta anytime this week. And eventually, I want to see consolidation between 95 to 96.85. And why am I expecting that? Well, because if I go back on the 15-minute time frame, right? So I've already shown this to my CFO Swing Watch members in the CFO Discord an hour ago here. And what I'm seeing here is a very textbook inverse head and shoulders, right? So we have our left shoulder right here, our inverted head right here, and our currently forming right shoulder, right? So if we do decide to reject from 96.85 tomorrow, okay, and if we decide to come all the way back down to around 95 or even 94, okay, so I'll give it more room here in my head, right, for Meta to move. So around 95 or 94, if it breaks below 95, then it has to hold 94. But if we decide to break below 94, then this inverse head and shoulders chart pattern will be negated as we start to fill in the gap as more sellers start to come in after that loss of 94 as new support. Okay, so for the rest of this week, I will be keeping my eye on Meta for another position because I did not get in at the 95 hold and break above the wedge here. So make sure you guys are keeping your eyes on this one as well because it will definitely keep keep on giving us these opportunities to get in long for Meta as we continue to stray away from this critical monthly pivot support level of $88.50. Right, so that was the breakdown of Meta. Now, SPY here today, I did not call this on the live stream because, well, I didn't want to do a live stream. Well, if you guys have been looking at the intraday price action for the entirety of this day, except for the last, I would say, 1 hour and 30 minutes or so, we've been basically stagnant, right? We were just consolidating up and down, and eventually we started making a wedge chart pattern as we've seen on Meta, right? So as we're making a wedge, we eventually formed an ascending triangle, right? And if you guys are wondering what that is, well, we created a pretty nice tight price range between 378 and 376. Okay, so clearly, all right, we have a tight range and clearly we are consolidating. And this is what I mentioned multiple times in the live chat room. Okay, and as we continue to monitor how SPY was moving, I said, okay, if we decide to hold the medium price that's between 376 and 378, which is 377, then we are due for another run up higher. And guess what? Okay, around 9:29, or I'll just say 9:30 to kind of just round the time up to 9:30, if you can even do that. I said, I think we can grab some SPY calls here, right? And it really didn't matter, right? I just want them to grab any calls that expire this week, okay? So November 11th, right? And it really wouldn't matter what contracts or strikes they got as long as it's not too out the money, right? Or too in the money where it doesn't even move, right? So some of my members got into SPX calls and others got SPY calls, and they were able to get a great percentage return from the hold of 377, okay, and then a great eventual breakout above 378, right? So I also updated after saying this that SPY is trying to hold this 377 level as the 21 SMA has caught up due to the consolidation that we've been seeing, where we saw that formation of that wedge chart pattern here, right? As I'm trying to draw these invisible lines using my mouse cursor, okay? And I liked how it was holding near the upper range of the bear flag rather than the lower range of the bear flag, right? So what do I mean? All right, so what do I mean by that now? So we've been tracking, okay, this specific bear flag on the 2-hour time frame. Okay. Right? So this bear flag right here. Okay, and now you might be wondering, wait a second, where is this ascending support trend line coming from? Well, this is the trend line that we've been following ever since that mid-October reversal run that we had. And then eventually, if you guys didn't know, the FOMC meeting allowed us to break below that. So this upper range on this bear flag is basically going to be a new level of resistance, right? Because we already retested it once, right? After breaking below it, below the support. So we know for sure that this is a level of resistance. But I do love the fact that we've actually retested it twice today, right? So this is our second time, the second anchor point of retesting this new level of ascending resistance. Because remember, this was a previous level of support, ascending support. So with this new level of resistance being retested twice, this is actually giving me a little bit more of a bias towards the bullish side, because I am still bearish, because there's still no reason to be completely bullish just yet. As we see on this chart right now, on the 2-hour time frame, right? We're still going to the downside, and there's still a possibility for us to make a lower high compared to these two pivot high points where we saw that rejection to the downside, right? And this was our first rejection point or pivot high point of 390.39. How do I know this? Well, just take a look at the high of this specific candlestick, which was the high that was made on this reversal. So if we do decide to reject off of this ascending resistance trend line once more, then we will definitely head back down and retest the lower range of this 2-hour bear flag that we are seeing right now. Now, I'm still holding SPY calls. Okay, they are, I believe, they ended up being 30% to close. All right. So hopefully I'm able to get out with that 40% once more tomorrow if we decide to gap up. So far right now, futures is looking very, very good. I gave my CFO Swing Watch members a nice update on SPY futures. So if you guys want to know what I said, make sure you guys click on the link in the description box below. It's the very first link, and it'll take you to the CFO Swing Watch newsletter subscription page. And if once you guys subscribe, you guys will get access to the CFO private Discord. Okay, so you're getting 2 for the price of 1. All right, so hopefully I'll see you guys in there. Now, with that being said, SPY here, like I said, it can go one way or the other, right? We need to see another movement to the upside, which is the reason why I kind of decided to hold on to my calls. But also, I just wanted to hold my calls to see what will happen with midterm elections coming up tomorrow, right? And the results will start coming in later tomorrow night. So that will definitely affect futures as well. So make sure you guys are watching futures, and make sure you guys join the CFO Discord to see my constant updates that I give to my CFO Swing Watch members for SPY futures, especially when we do have an upcoming catalyst, or when we're at a very, very important and significant inflection level, right? These incredible inflection levels that we've been playing off of for the past few couple of weeks has been absolutely amazing. And that's the reason why I wanted to show you guys Meta, which was a great, I think, 3-day swing here, right? And into the weekend as well. And you know, it's one of those things that I think people get so scared of to swing into the weekend, and rightfully so, right? The markets have been very, very uncertain, even more than normal, and they've been very volatile as well. So especially for a company like Meta, which has been flooded by bearish news and bearish sentiment as of late, right, with their earnings as well, it will make sense that people were a bit skeptical on whether or not this long trade would work, which is also the reason why I think a lot of my CFO Swing Watch members did not grab the Meta call with me. But that's fine. There's still going to be a lot more opportunities on Meta here, as I've explained, because, well, we're still making this inverse head and shoulders chart pattern, and all we need to do is consolidate between 94 to 96.85 or 97 if you guys want to keep it simple, or 95 to 97, which will be even better, right? As that will be an even tighter range for the price to consolidate and basically suck in more buyers so that we are able to see a more bullish breakout above that $97 level. Okay, so that's it for this video. If you guys liked what I said so far, make sure you guys leave a thumbs up down below. And if you guys are new here, welcome. And make sure you guys hit that subscribe button, especially if you guys liked what I said so far in this video as well. All right, I'll catch you guys all on another video. Have a great rest of your night.